Hey everybody, welcome to Mortgage Today for Monday, October 4th, 2024, and oh, what a day it was. UMBS opened the day up 38 basis points. Nice, we needed that. S&P futures were up S&P futures were up 7.5 points. The upcoming week won't have a lot of important economic data, but we will have the election, which is kind of a big deal, and the FOMC meeting, which is also generally a pretty big deal. The FOMC meeting will take place on Wednesday and Thursday, with the announcement and press conference coming on Thursday. Will the elections move the market? Probably too soon to tell, which is a weird thing to say the day before the election, and a lot will depend on who controls Congress. That has kind of the bigger implication on this. At the margin, Trump is more likely to use sticks versus carrots with trading partners, which would probably be more inflationary than Harris. That said, the difference probably won't be dramatic. The Bloomberg Dollar Spot Index slid as much as 0.7%, while the yield on the 10-year Treasuries dropped 10 basis points in early trading after a new poll suggested traders may be underestimating the prospect of a win for Democrat Kamala Harris. The Mexican peso, which has suffered from Trump's talk of tariffs, was one of the biggest gainers amongst the major currencies. Bitcoin, which has climbed on Trump's support of cryptocurrencies, slipped. The moves signal a widespread reevaluation of the so-called Trump trades after polling data cast doubt on that result. A Des Moines registered Mediacom Iowa poll showed Harris with a 3 percentage point lead in the state over Trump, and could be a bellwether for how Harris performs in nearby Wisconsin, one of 7 swing states. The manufacturing economy struggled in October, according to the ISM Manufacturing Index. U.S. manufacturing activity contracted again in October at a faster rate compared to last month. Demand continues to be weak. Output decline and input stayed accommodative. While the average day of the past few weeks has involved election odds pushing yields higher, today was quite the opposite. There's some debate as to whether it was polling or better market odds that got the market's attention, but less debate about the nature of the ifs and thens at the broad level. There's some debate as to whether it was polling or better market odds that got the market's attention, but less debate about the nature of the ifs and thens on a broad level. A modicum of lower certainty of a Trump victory was the catalyst. It was a spark that didn't need to burn for long in this environment characterized by excessive dry powder for volatility. Bonds thought better of the overnight rally by the midday, and not enough to undo the gains. Ultimately, the yields ended right about where they were before Friday's job report. Exciting stuff for today, but boring in the bigger picture. UMBS closed the day up 31 much-needed points at 99.17. So at 99.17, we're still way below all the trend lines, so there's no reason to even look at the trend graphs.